S&P 500 futures were little changed Thursday night after the broad market index ended an 8-day run of gains. S&P 500 futures slipped by 0.05%, while Nasdaq 100 futures slid nearly 0.2%. Futures tied to the Dow Jones Industrial Average flickered near the flat line. In after-hours action, the trade desk swooned nearly 30% after the digital ad company offered weak revenue guidance for the fourth quarter. Elsewhere, hydrogen fuel cell company Plug Power cratered 25% on a wider-than-expected third-quarter loss and a miss on revenue. During Thursday's trading, the S&P 500 slipped 0.8% and snapped its longest winning streak since 2021. The Nasdaq Composite declined by 0.9%, ending a 9-day string of wins, also its lengthiest run of gains in 2 years. The 30-stock Dow dropped nearly 0.7%. Stocks sold off after Federal Reserve Chair Jerome Powell said the central bank is not confident it has done enough in the battle against inflation. The Federal Open Market Committee is committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. "We are not confident that we have achieved such a stance," he said in prepared remarks at an International Monetary Fund event. Bond yields moved higher as stocks fell on Powell's speech. The bond market itself is typically a lot smarter than the stock market when it comes to predicting rates, Kevin Simpson, Capital Wealth Planning founder and chief investment officer, said on CNBC's Closing Bell on Thursday. The investor said he's managing his portfolios under the expectation rates will stay higher for longer. The Fed's not cutting rates. "We've got to prepare for a market that's going to have higher rates until the beginning of 2025, Simpson said. As the week winds down, the S&P 500 and the Dow are poised for modest losses of 0.3% and 0.5%, respectively. The Nasdaq has a modest gain of 0.3% week to date. In the world of economic data on Friday, the market will be looking toward November's preliminary consumer sentiment data for insights on the health of the consumer. Wall Street will also be listening closely toward several remarks from central bank officials, which include San Francisco Fed President Mary Daly, Atlanta Fed President Raphael Bostic, and Dallas Fed President Lorie Logan. Apple has agreed to pay $25 million in back pay and civil penalties to settle charges from the Department of Justice accusing it of discrimination in its hiring practices under the Immigration and Nationality Act. The Department of Justice said Apple was not advertising positions that it wanted to fill through a federal program called Permanent Labor Certification Program, or PERM, which allows U.S. companies to recruit workers who can become permanent U.S. residents after completing a number of requirements. Per the settlement agreement, Apple contests the agreement and said it believed it was following Department of Labor regulations.